Hello, everyone. Welcome to our beginner's guide to investing. Today, we're going to break down the essential steps you need to take to start your investing journey with confidence. Investing can be a powerful tool for building wealth, so let's dive right in. Step 1. Lay a strong financial foundation. Before diving into investing, it's important to address any high-interest debt and establish an emergency fund. Pay off credit cards, personal loans, and create a safety net of savings to cover unexpected expenses. This solid financial base will provide stability as you begin your investment journey. Step 2. Educate yourself about the world of investing. Take the time to learn about different investment options, such as stocks, bonds, mutual funds, and real estate. Understand their characteristics, potential risks, and potential returns. A well-informed investor is better equipped to make wise decisions. Step 3. Embrace diversification. Don't put all your eggs in one basket. Diversifying your investments means spreading your money across different asset classes and industries. By doing so, you reduce the risk of losing all your investment in case of a downturn in a particular sector. Remember, diversification is key to long-term success. Step 4. Set clear goals and create an investment plan. Determine what you're investing for, whether it's retirement, a down payment on a house, or your children's education. Once you have a clear vision, develop an investment plan that aligns with your goals and risk tolerance. Consider consulting with a financial advisor to help you create a personalized strategy. Step 5. Start investing regularly and be patient. Consistency is key. Set aside a portion of your income each month specifically for investing. Consider using tax-advantaged accounts like IRAs or 401ks, which offer potential tax benefits. Remember, investing is a long-term game, so stay committed and avoid making impulsive decisions based on short-term market fluctuations. Finally, Step 6. Monitor and adjust your investments over time. Regularly review your portfolio's performance and make necessary adjustments. This may involve rebalancing your portfolio, buying or selling investments based on changing market conditions or your goals. Stay informed and be proactive, but avoid making drastic changes based on short-term market fluctuations. And there you have it. A beginner's guide to investing. Remember, investing is a journey that requires patience, knowledge, and discipline. Start with a solid financial foundation, educate yourself, diversify, set clear goals, and be consistent in your investing efforts. Thank you for joining us today. We hope this guide has empowered you to take the first step towards financial freedom. Don't forget to like,